Hello guys, welcome to the Train Parrot. Just in a couple of hours we got the CPI report incoming, and some big whales have been depositing into exchanges and some of them have been distributing as well. I'll give you an update on how much damage we have taken with this move down on the 4-hour daily time frame, and of course we're gonna look at how it's looking the order book as we start the day, whether there is a sentiment to support the price at certain levels or not. After all, the CPI is a key aspect to consider when it comes to the sentiment of investors towards the cutting rates event or not. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Remember to continue hitting the like and writing down comments down below. That's definitely been helping this week. After you got the slap from Batman on Sunday, I think that did have a good effect. I wouldn't suggest to trade an event like the CPI, but you can take the chance to open an account and have it ready. Once we have a settling decision on the CPI, we might see some volatility incoming, hopefully in a direction that we can anticipate with the data we are gonna look into this video. 30,000 in bonuses is what you can get from 2bit, which is an exchange that was built by people from Bybit. The intention is to offer the option to do KYC or not have to do it. It's up to you. And if you register, you get automatically $50 deposit in your account even before you do any deposit. Now, if you deposit and you start trading with volume, you can claim up to 30,000 in rewards, get access to 200x leverage and 1,000 trading pairs. You can see that the move into 123 had some positive effect in attention to Bitcoin on social networks. We are kind of breaking out from the neckline in here, and I suspect that if we carry on going into higher liquidations, we're talking about the bucket number 2, definitely that's gonna attract a lot more people. During the CPI, it's expected to have volatility, and I'm thinking that probably the profit taking that we are seeing these days is a combination of different aspects, including, of course, the uncertainty of what's gonna be the outcome of that by itself, but also we just took the largest liquidation pool on Bitcoin, number 1, so the number 2 is a low-hanging fruit, but it's way less attractive to what we already took from the point of view of the market maker. So yeah, they can afford maybe in this vacuum of liquidity to hold on the horses, take some profits, and then see if things are still healthy before deciding to go for the bucket number 2. After all, we are approaching August, and from the point of view of seasonality as well, in between July and August, we tend to have the end of the summer kind of pullback in preparation for a typical end of the year where we concentrate the most bullishness. If you look at the monthly returns, typically that is the month to be in the green. September and August have kind of halfway red, so if it's not one, it is the other one, the one that gets you the pullback. July tends to be in average pretty much in the positive. Glassnode is kind of confirming this information. Over the past 24 hours, Bitcoin investors realized 3.5 billion in profits. We're gonna have a look at the SOPR. Interestingly, I'm not seeing necessarily any move on Bitcoin. On Ethereum, yesterday we were talking that we are dangerously approaching the area where Ethereum traders tend to take profits according to statistics, but when it comes to Bitcoin, yeah, we are kind of at the top of the range, but thanks to this peak that we have in here with the movement of the Satoshi era wallet that we had, that movement of 7 billion, I think, it kind of screw up all the statistics. So if you notice in here, there is this trend to the downside, and we are at the top end in here about to break out, but we just had a huge peak, which is completely skewing things. But yeah, we are in an area of primarily distribution, but the indicator is still not confirming that. Neither the aggregated open interest. I was expecting this morning to see the 41 billion retrace significantly, maybe into 38 billion, but we haven't seen that yet, and I'm pretty sure that I refreshed this. No, it's still at the highs, so maybe it's delayed to show us what's been the effect in the open interest aggregated across all exchanges. I'm very interested to see if this is gonna hold 38 for continuation, or if it's gonna have a huge retracement back below resistance. Of course, that is very interesting data point. If we go into CME, we can see that the one that we formed over the weekend now is completely gone. And as I say yesterday, I didn't want to add and scale up my short at 123 because that was gonna cause an excessive amount of risk from my side, because I enter at 12.5, I add at 18 on this retracement in here, and this will be the third or order when I already know that anytime we can hit number 2 and I want to reserve adding into that position. If you are not interested in shorting and you are in a long, the information still applies to you. I can talk about a long or I can talk about a short. It is precisely the same. If you were in a long in this area and you know you have right below your feet 2 CME gaps, you can take partial profits at this high and then wait for 1 or 2 to get filled and then re-enter with that amount or less, expecting potentially a move back up. So the alpha is the same, it's just the way you interpret it to your own particular scenario. Of course, I'm gonna be talking about my short. People are also wanting to know about that. But fair enough, most of the people are currently in a long and wondering whether to hold or take the profits and run. The worst scenario for the longs is to take profits in here at this neckline, expecting that it's gonna go to the next one here or way lower, and then we do a liquidity hunt at 116 or 115 and we start claiming the top liquidity, leaving you without part of that pie. Yes, this is an inverse cap and handle and the target is 110.8 on CME. Let's do the same exercise on Binance. So this will be the target that is around 110.3 in case we break down below the inverse cap and handle. But remember that we are in a situation where we have a strong trend on the weekly and on the monthly. I put uptrend a few days ago, but I forgot to change the color on the daily, which is now green. The 4 hour is in the red because we broke all support at the moment. That means that there is a risk that this green needs to flip also into gray maybe or into red as well if we also break down on the daily. But so far on the daily, things are still holding that first line of support. So that means that the bullishness of this is pretty much intact. It will be 100% intact if we didn't do this, right? We have a breakdown with a fake out on the weekend that we call out. We say that most likely is a fake out and we're going to carry on to the upside. And we did. So far is 99% intact. We could say the uptrend on the daily. Whereas on the 4 hour, we took more than a few bullets, right? We were at the top of the range. We put a double top on the momentum right at the top of the range, pushing bearish divergences. Everything was overextended. We lost the first line of defense, the second, and the third. All we have now left is the bottom of the range, basically defined by the lowest level on the percentile, which is 24. Now, if we don't reclaim quick and fast the yellow line, we could be heading for more deeper correction. And the 4 hour has the key at the moment. Reclaiming that will be really bullish, particularly if we do it in an aggressive manner, something like this, reclaiming. Then the daily most likely is gonna survive holding the orange line of support. But if the 4 hour stays there very humble and pushes a new candle back down, that is gonna break the daily support, and then we're gonna have to flip this into gray or red. The CPR, you can see that the second level of resistance now is being tested as support and potentially broken, in which case then we have the 112.3 as the next level of support. In CPR, these 3 green lines are called resistance and this support, but you know, depending on the context of what I'm saying, they can take different name. So the 4 hour has been very intense as a breakdown. So hold on the horses, what happens with this last line of support of 116 in case we go to the bullish order block located at 110. That is the target. It's the technical target. Remember, always in a strong uptrend that we can do a liquidity hunting here in continuation to the upside. We have fat fair value gaps coming in right above the price that we can use potentially now to reclaim the neckline and continue going up. If we just reclaim the first one and then we come back for a retest in here, we're gonna end up forming a head and shoulder. So ideally we want to reclaim 119 and 121 with strong momentum, but it's a very tough one because we have the CPI report today and I'm expecting things to be a little bit all over the place, particularly on the 4 hours. So putting a line from the top to the downside in here after such a sharp decline and claiming that we are having some sort of breakout to the upside is gonna be really tough, right? We can get a breakout pretty much right now and then it can be a fake out to the upside. So I wouldn't use that information as a strong indication with huge confidence that we are gonna resume immediately. I think we need to get over of the reaction of general markets as well. I'm gonna have a look at the opening in the pre-market prices to see how is the sentiment incoming. A reclaim needs to be above 49 on the RSI 4-hour. So I'm gonna move this back down to 49.21. So we need to reclaim now 117.4, I will say, and start consuming the fair value gap to reclaim that last line of support and say, well, that could turn into a fake out to the downside of the global support. On the daily, we can also identify that support that we need to hold, which is now 63. That is critical. So let's move that 70 that was completely off. I was expecting to take a lot longer to meet with the orange line, but we did it so quick in such a huge dump. It's not a huge dump in percentage, but in momentum in the 4-hour, we declined very sharply. In just a couple of candles, we broke the global support. On the daily, it's not a big deal, really. You can see these moves of the daily in momentum every few days. So that 63 has already been tested. If we focus on the price action in here, you can see that we have kissed the support on the daily once already. Now we are bouncing off that. The best scenario is to get that red candle completely bought up until the top, but we have kind of a shooting star in here. I think that's the name of this candle. Correct me in the comments. My brain sometimes make up names for candle patterns, but I think it's a shooting star and it's a topping candle on the daily. We can revert it, of course, if we get a full now green candle right after that, ideally taking the highs. That is the way of completely invalidating the effect bearish of that candle. If we break that 63 on a daily basis, we increase the chances now to go into around 42 because we need to accelerate the move. That's why I'm moving it from 45 to 42. And that is all very speculative based on just past performance and experience. Is definitely not me knowing the future. I'm trying to lean towards the most likely thing. I'm not trying to really read the future. By doing so, many times I'm right, but many other times I'm also wrong. Remember that my goal is not to forecast. My goal is to make money, okay? There's a huge difference. I can be wrong every day and still make money. I think the equation is to lean towards as much as you can towards things that are high likely. Then manage your risk. Then know, and that means know how bad things can go. Assess it with a hand in the heart, right? Don't be the dude that says, nah, this will never break down. Now we're in a completely different phase of the bull market. That dude is the dude that then is gonna have to hide those losses from the wife that is gonna be following across the house with this tool that you use in the kitchen to make bread. What is it called? I don't remember. I don't even know what is the name in Spanish. And yes, volatility has spiked a lot. My new indicator called the slab is showing me how many times we have had decent volatility to the downside and has been bought up. Not always is the best signal, but during a bull trend, buying the dip with this shows to be one of the best entries. Here there is an exception in February, but apart from this one that carry on 13% lower, which you can handle with a stop loss, then the rest of them, if you narrow down a good stop loss placement, it's a very good signal. It's called the TTP slab. I still don't decide what to do with this. And now we are back below the resistance on the weekly, just like we were in March 2022 after the third consecutive hit with bearish divergences well into the topping year. Now I'm interested to see now, of course, whether that is gonna end up the week like this, or if we are gonna actually manage to break out into 125, liquidate the bucket number 2 that we've been talking about in here, and potentially settle the scenario that I find extremely odd for this rally, for this bull cycle, which will be a breakout from a descending channel formed with bearish divergences late in a topping year. Everything is possible, right? But so far we hit perfectly the resistance at 123.6 by the dollar, and that is the one that is potentially forming a shooting star, not as big as in the daily, but potentially being a point of rejection into August. I'm not claiming that things must play out with the seasonality of Bitcoin, August and July being bearish and then repairing the damage on September, October and November, but it's a possibility. We need to put it on the table and not be scared about it and not have emotions about it, which is probably what is causing you now to write down a comment below, you must be crazy about this. No, we are scientists, we have a brain here. We know black and white, we know gray, and we decide. I made my decision, you make your decision. I am currently in a short, I'm slightly underwater, and I might need to manage my risk if we go higher. From here, I'm very very tempted to add into a long from somewhere around here, but somehow seeing all these signals keeps me into, if I do a long, I'm gonna look for a much better opportunity. After all, I still have spot exposure, a lot more than my swing short, by the way. Spot is making me the biggest return the cycle. Swing is fun. I will say from spot allocations, I'm probably making 70% of the profits in the cycle, including when I sold Solana, when I sold all those coins at the very highs, XRP, and partially Bitcoin as well. Now, if Ethereum goes back above 4,000, that's gonna be another big chunk. And the swings, yeah, swings are paying all the bills and all the holidays, so that's also good, but I'm not gonna buy a yacht with my swing trades. I'm still a little bit too conservative for the sizing of my swing trades. Every time I close in profit, my feeling is why I didn't put more. Anyways, let's look into some other data as we approach the CPI report. And this indicator is fantastic. I love it. This is the long-term holders, but with a smaller rolling window of only 30 days. So this one, contrarian to this one that is not really telling me a lot about the short-term holders and long-term holders, is just flat. But this magnifier glass in here gives me the best hints. You can see that when the long-term holders are in strong accumulation, here, have a look at the labels. If we get to this line, we are in accumulation. If we get into this line, we are in strong accumulation from long-term holders. And they accumulated in 2021 on the dip at 28 and on the dip at 43. They were right twice. They got into 69, then they accumulated on this dip right before entering the bear market, and they sold at 48, the bastards. And then the whole bear market started and they started accumulating a little bit too early. Now let's go into what's going on in here, because they are still doing clever things, right? They are accumulating at the end of 2024 into the rally from 49 into over 110. So that gave them more than 100%. They distribute at those tops, and what they've been doing at these highs is unprecedented. They are accumulating as we approach 98, and they accumulated with strong accumulation. And now they're flipping back into the zero line, which means that they are no longer accumulating. They are no longer with that bullish perspective. And that has changed dramatically as the price goes up in here. You can see they were accumulating strong at around the price of 108. They were accumulating just mildly, and now they're going back into the zero line. Getting into the zero line, it means that in the 30-day rolling window, now they're flipping potentially sooner into being leaned towards distribution, maybe a small distribution, but sometimes that's all it takes to stop the price, right? We went into an all-time high around here and we put a local top just by getting into the zero line. So don't underestimate getting closer to the red. You don't have to be in strong distribution to put a local top. So be on the watch out in here, because we have the long-term holders slightly against us. Not the final word, but you know, a good data point to keep in mind. Then another data point that is extremely important today, you cannot miss this one, is the oscillator of the open interest of long and short liquidations. This one is showing today 18.5. If you try to track every time we are at the lows, that means that an absurd amount of shorts have been liquidated, and that usually happens with the price going up, of course, with a pump, or sometimes just with an unexpected move up. It doesn't need to be bananas on, by the way. And then right after we hit a very low in the oscillator, we can say that we are about to approach the end of the shorts season liquidations. That happened around here at the local top of 73. Then it happened around here when we were approaching this all-time high of 104. Then recently, with this new high in here, we got again a season of liquidating shorts. Then we got a season of liquidating longs that ended at around 15% positive. Now we are at 14% negative, which is lower than the previous read of -12. So we are very extended in liquidating shorts. That makes a lot of sense. If we look at this 1 month chart of liquidations, we can see that around end of June, the love was being given to the liquidations was being given to longs that got all the love. And now recently is the shorts, the ones that are primarily being liquidated. And this shifts constantly as an oscillator, as you can see in here. So what we should be expecting based on statistics, not based on future crystal ball reading, but you know, with certain certainty, is that we should be expecting a little bit higher on the price or just stopping in here and then longs being being liquidated. That's what that model says. Now, let's go into the next model, which is the futures open interest percent change oscillator. This one has so many applications and I love it. Now we are sitting at 20%. You can see that not very often we sit at these high levels of open interest lean towards the longs. And that is because we have too many longs and the open interest has flipped too high. Once this peaks and it puts a pivot down, 99% of the time is a local top. Like the previous local top was precisely that. This one slowed down in here and then it carried on slightly higher. So the way that you can trade this is not by waiting for this to be very high to take a short. If you are in an uptrend, the best way to trade it is every time that it reaches a high and it comes back down into a red, you can add to your long. Then in here at this level, add to your long. This in this level, add to your long. Once you get to the highs, you take from the long because those are levels that are extreme amount of longs. So you basically swing with the trend. So if I was looking now for a long after being so high in here, the safest way to find that long is to wait for the cool down of the open interest somewhere inside the channel. The lowest it goes, the best quality of the signal, but the more rare the signal. So you have to find a balance there. And of course, entering along with the open interest still at the very high means take the largest risk for the continuation to the upside on your long. Now the indicator hasn't updated because the price is still pointing up. So I want to see the next reading. If you're part of my Patreon, you can pick me, in a couple of hours after the video goes live and ask me for any indicator. If I'm next to the computer and I have access to it, I'm happy to share it. Now this one is crazy alpha today, right? We have 44,000 Bitcoin from big, large holders, big whales that deposit into exchanges. And I'm pretty sure that that went into Coinbase. Yeah, 10,000 went into Coinbase, 99%. That was at 11 a.m. just 1 hour ago. Before that, we have some small deposits, some decent ones, 500 million. That's a big one. Then 400. So there's been a lot going on with Coinbase. Here we have another almost $1 billion. And all of that is today. So there's been definitely something going on in terms of profit taking. This to me seems to be a lot more than profit taking. It's almost like if they knew something. Well, we have the core inflation, so that must have a big effect into that. Of course, we hit all-time highs. We hit the largest liquidity pool. What else do you want? People take profits there, and they did the same when we were exiting in 2024 in this area. The profit taking here was massive, and that's how you got these drawdowns of 10% in just a few days, and still you carry on to the upside. That makes really challenging what's going on in here, because this could be just literally one of these corrections before you go into number two, where things can go exponential like in here without corrections anymore until you reach the area of various divergences. So whether one is just experience the same things that happen in one in here, or if it's gonna be a local top that lasts for longer, is very, very tough to say, guys. It is tough, but I made my mind and I'm trading things in my way. You can use this information to trade in a different way. We don't need to be enemies because we are on the different side of a swing trade, when at the same time I'm holding a heck of a lot more in spot. That makes me still proportionally way more bull than bear. On the 30-day rolling window of liquidation map, if we are looking down to see where is interesting for market maker, we have 114. I'm not interested because my average is around there. I'm interested at least into 110 or 107. That sounds really sexy. And if we get there, I'm sure we're gonna get the leverage squeeze to trigger a buy, or we're gonna get the open interest to fully reset. Don't wait with me. Don't wait for me to take a long, guys. I am very conservative, so I filter out lots of good opportunities. 114 might be the best opportunity that you're gonna get. That could be the liquidity hunt that we were talking. You go to 114, you reclaim 117, that's your liquidity hunt, and off to the races back into 125. You decide what you want to decide. It's not my problem. Let's look at the order book and let's see what the purple whales are doing in here. They took the ride all the way to the top, and these guys take the best trades. Look, they got into there and immediately they started dumping. As soon as they got at this top, you had the lower low and they completely started started dumping from the lower high that was producing the price. And that was the signal they wanted, and they dump all the way to the bottom. Perfect. What's going on with the rest? We got the green ones that are trading like crazy this thing. This is the dip they were waiting for, and they are already all aggressively buying the dip. Purple whales? Nope. They're looking for another opportunity, right? I tend to mimic the people that have more money than the people that have less money. You tell me which one you want to mimic. In trading is more or less, I think in Spanish there is a say something like, tell me who you spend most of the time with and I'll tell you who you are. In trading it should be, tell me which size of wallet do you mimic and I'll tell you how much money you have. I mean, it will make sense. So still we are holding in here the neckline. I can see there is some support coming in at 115, but I really don't like trading like these days. It doesn't show the detail of the price. Let's get serious and let's use Bookmap. And you can see that yesterday there was a huge order supporting in here at 114 that has flipped slightly in here to 114,600, just a tiny bit higher. But during this move down, it went slightly below 114. So they're trying to narrow down where are they gonna rescue the price. Don't expect that that's gonna stay there. Yesterday it was 3K. Today is just 1K. So 1/3 is left there. We have a CBD at minus 10,000, almost minus 11,000. So definitely still the aggressive sellers are in control. I'm gonna keep Bookmap on one of my monitors all day as I record the rest of the videos because I really wanna see how is it gonna play out in here. I need to decide whether I put out 2 more videos about altcoins today or if I just go live during the CPI report and we do all together. We look at Bitcoin and we look at the alts quickly. I guess I'm gonna do the second one, but let me know your opinion in the comments down below. And yesterday we have definitely a huge liquidation on Binance once again. The biggest that we had before that was looking very big was 151 during this candle, and this one is way larger. So I'm very confused why in here is looking upside down. This should be larger now, but it's not. And so far today is 467 million in liquidation. So maybe it's not that big of a deal today relative to the other day. Let's look at the ask and bid and other indicators to see how the order book is looking today. We got some decent support at 5%. Today 5% is defending the price, not as much as the 10% is. On 10% we have 75 percentile, whereas on 5% we have 97. So there is a huge defense at 2 and 5%. That usually shows that there is more confidence to hold the price at that level, but it can be a double-edged sword because the shallower the defense, if it gets broken, then below 10%, if we don't have enough support, then that can slip slightly bigger pullback. The longs have come back from the lows of 28, now sitting at 46. That's a big comeback. And the previous time that we did such a move into 46 was this dip in here at 105 that got bought up back into 110, a 5K move with new highs. On a bigger correction, for example, in here when we went to 98K, the longs peaked way higher into a level of 56. So you need a lot more longs to hold a larger pullback. So this, if it's broke the neckline of 117 and started coming back down, maybe the longs are going to come into 56, and at that point it's gonna become more obvious that we found a local bottom. This could be a local bottom like it was at 105, but it might not be. It all depends on how CPI is gonna make those investors feel and what the general market is doing as well, because this is just a data point. It can break or it can play out like the previous time. And yes, the green 5 to 10%, as you can see, is sitting at the lows of 400 million. Before it was sitting at the highs of 800 million, holding the support at these levels. Now they have slashed that in half, holding this level. And now think about this, they were spreading across 10%, actually 5 to 10. So from here, more or less to here, they were placing 800 million in support right there. And that created an illusion of support, right? Those limit orders, and that helped the price to pump. But now, if I do a 10% down, so pretty much from 110 into 104, that support now is only 400 million, half of what it used to be. So those are just data points, and it gives us just an idea of what's changing under the carpet when we are trading. It's not to take the final ultimate pro be always right decision, but it shows you that there is a little bit less confidence than what there used to be when we were at 110 and that we are at a higher price. Therefore, that tells me that we are at a higher risk in here to take the same long that you will have taken here at 107 versus taking it at 117, 10k higher as well. The longs got slashed by half. We went from 34 into 16. The numbers are completely off in here. It's talking about billions. I reported the issue. They still don't say anything, but at least I can say that 16 is less than half than 34. So we have taken a lot of longs, but there are still longs to be taken. That's the second outcome of that. And as the price comes back down in here, we can see that small positions are stepping in the anchor CBD, applying just a position of 0 to 10k, whereas the whales are at the moment heavily distributing still. Okay, sometimes this can be a long signal, like it was in here. It went slightly up, but not all the time. In here it was a good long signal because the actual retail were so heavily buying, while at the same time the whales were heavily dumping. But since the whales stopped dumping and the retail started buying the dip, it became a local bottom. Weird, but sometimes retail can bend the arm of the whales. They slow down and you produce a local bottom. With this sort of advanced tools, really you can see a lot more what's going on. Don't worry guys, I'm only gonna tell you. That's why you're subscribed to the channel, you comment and you give a like to the videos to keep me full of energy publishing this content for free and not just giving it to my Patreon paywall, which are always gonna be spoiled. After all, they show their support every month. So yeah, now is the time of the decision, guys. Are we gonna get the fat one into 111 and you're gonna see me tomorrow with a big smile and already cashing in? Or are we gonna go into 119 and form a head and shoulder in here and then still make me happy? Or are we gonna go for 121 and start continuing the way up into 130 where I need to continue working on my short? No one knows. That's the ugly truth of trading. VIX still doesn't reclaim the lost support. If we want to see any potential expansion of the VIX into the tops, causing correction on Nasdaq and S&P, we need to reclaim this 46, which is not happening yet. Nasdaq pre-market is looking in the green and taking the highs in here. So there is an opportunity maybe for Bitcoin to carry on to the upside according to the pre-market sentiment. That of course can change, but that's what we got so far. On the S&P is just flat in here. The pre-market is actually higher, right? 127 versus 627 versus 624. So we have a green potential market open coming in on the Nasdaq and S&P. So that means that people are feeling positive about what's about to come with the CPI. The 4-hour is still not reclaiming, not breaking out from the shallow line. So let's keep an eye on the charts. Remember guys that you can access all the charts in real time. Okay, so you go to any post on my Telegram and you hit TTP charts, you get access to all my charts. Just use the menus, click on the chart that you want to watch. You can go for the Bitcoin charts, general markets, stocks, indices, all coins, all of that. You can get up to 2 charts per day or ask your friend to request another one for you. That's all valid. Or it's also valid to support the channel so we can continue offering this to all the people. 3, 6 months, 12 months. We can also do a sale. I'm thinking what could be a good excuse to do a sale maybe on the weekend. Let me know if you are interested. Wrapping up, I think we need to keep our eyes on the 4-hour at the moment. There is a good decision to be made in here, whether we're going to break down from here, produce a liquidity hand, or hit the technical target of 110. If we manage to hold 117 and we get into the second fair value gap, there is a good chance that we carry on to the upside and we go for liquidation levels that are higher with all-time highs, new all-time highs, of course. If you are entering on a long on this support, just be aware that there are some key differences between this support and the support of 108. That doesn't mean that you have to get wrecked. You can still make lots of profits from support if it plays out. We're talking about probabilities. The probabilities of this versus this one is slightly less likely to play out. So maybe here you have 80% of chances of going to the upside. In here you may have just 60% chances to go to the upside. Whether that's enough for you or not, whether you're a degen or a conservative trader, I have no clue, so I leave it to you. Guys, thanks so much for watching. Remember to support the channel in any way you can, and I'll see you in the next one. Bye bye.